Well, hello, welcome to Business Mornings. Another trading day right here in Lagos, Nigeria, and definitely we're tracking most of the markets. They're buzzing again today. And talking about the star commodity, we're seeing oil prices have edged up today, with markets focusing on the high-stakes meeting between U.S. President Donald Trump and Chinese President Xi Jinping to see if it will yield any positive results towards a resolution for the Iran war. And we're seeing oil prices already reacting to that there. We see 0.10% higher. I was thinking maybe Brent would, maybe WTI would tank below $100 per barrel, but that didn't happen. WTI 101, back up 0.31% higher. Brent crude $105.87 per barrel, 0.10% higher. So investors are watching out for comments coming from China at this point, and also if there's some kind of de-escalation. Although we keep seeing escalation when it comes to the Iran war at this point. So keep your eyes on oil going forward. Meanwhile, Alhaji Aliko Dangote says the Dangote Group has turned down the request from the Nigerian National Petroleum Company Limited to increase its stake in the Dangote Petroleum Refinery beyond the current 7.25% ownership. Mr. Dangote disclosed this during an interview with the CEO of Norwegian Sovereign Wealth Fund, Nikolai Tangen, raising fresh conversations around ownership structure and strategic control of Africa's largest refinery project. Then to the markets now, we've seen Nigeria's stock market surge to a historic high yesterday as sustained investor optimism pushed the Nigerian Exchange All-Share Index above the 252,000 mark for the first time ever. The benchmark index gained 283 points to close at 252,695 points. They have it just about 4 basis point rise. But, you know, we're used to higher rises, you know, so far. So this is almost looking like a blip right now. Looking at volume, value, and deals, see all of that in red, 1.68 billion. That was traded yesterday, valued at 109.43 billion naira. And we did see MTN Nigeria, you know, helping prop up the all-share index yesterday. Let's look at some of the top gainers now. We see Livestock, Dark Communications, CWG, led the gainers charts yesterday, full 10% rises, and also MTN Nigeria. And yeah, we did see some pressure on some of the banks yesterday, but we'll see if that continues. Meanwhile, billionaire investor and chairman of First Holdco, Mr. Femi Otedola, strengthened his grip on the financial services group after acquiring additional shares valued at 43 billion naira. The latest transaction executed on Nigerian exchange pushes Mr. Otedola's stake closer to the 20% mark, reinforcing investor confidence in the banking giant and renewed momentum in the equities market. So we're seeing billionaire moves right there.
World order reshuffling, real power shifting. Aid is retreating, capital fleeing to future-proof African youth. What are we willing to do?
Conversations that will shape the future of Africa, why Africa must embrace shared ownership. These topics and more are received live as over 2,500 chief executive officers meet in Kigali to engage and strategize. Described as Africa's leading private sector event, Open Debates is set to get to the heart of the challenge of Africa's development. And the president of the Republic of Rwanda, Mr. Paul Kagame, begins with issues around exploitation of the continent's mineral resources. Our correspondent in Ijomekwa, she's in Kigali, and standing by to update us on the conversations.
Somebody say, go and get whatever you want to, and do whatever you want to do in that region. That is how Africa is treated. So these powers you see that come here lecturing people on democracy, human rights, and they are doing it with one arm, and the other, they are just taking away everything that people own. So, and this is what is critical. This is why Africa, leaders of Africa, some of whom are here, brothers, and the CEOs and other Africans, I think we need to give ourselves value of some kind. We can't just be people who are waiting to be ripped off by somebody who is shrewd enough and has the power to come. No, we must be able to say no.
And yes, Ini John Mekwa, she's right there in Kigali, and she'll be sending us updates as she gets them. We'll get more updates later on Business Incorporated. Well, we see Nigeria is pushing to strengthen its knowledge economy and reduce dependence on foreign scientific infrastructure. As the National Biotechnology Research and Development Agency, they launched a new National Genomics and Bioinformation Data Initiative. The project aims to build a secure, indigenous genetic database to support breakthroughs in healthcare, agriculture, industrial innovation, and environmental sustainability, while also creating new opportunities in biotechnology, artificial intelligence, and high-skilled research jobs for young Nigerians.
The National Genomic and Bioinformatic Data Generation Repository and Management Infrastructure is therefore a strategic national intervention. It is designed to establish a sovereign, secure, and inclusive genomic database that captures Nigeria's indigenous biodiversity. This infrastructure will serve as the backbone for innovation across sectors, supporting precision medicine, climate-resilient agriculture, industrial biotechnology, and environmental sustainability, while ensuring that Nigeria retains ownership and control of its genetic resources within a robust data governance framework. The initiative is also in line with the renewed hope agenda of President Bola Ahmed Tinubu, particularly in the areas of economic diversification, digital innovation, healthcare transformation, youth empowerment, and sustainable national development. The National Genomics and Bioinformatic Data Generation Repository and Management Infrastructure will support the actualization of Nigeria's Biogenomes project.
All right, now let's head on to our first conversation. Yes, a lot of data coming out from the U.S. Yes, we've had CPI, we've had PPI, and we're also following what's playing out in China with the visit there with Trump and some of the biggest names in tech and the industrial development in the U.S. So we're going to be following all of that now. And joining me, we have Mr. Bezmark Kurani, CEO of Financial Derivatives Company, right here in the studio. It's great to have you, sir. Good morning.
Yeah, good morning, Daddy.
Another day, another dollar, another naira.
Interesting times.
Interesting times. And definitely we've been following all the data coming out from the U.S., CPI data. We had that earlier. Now we have PPI.
Yeah.
You know, we track the consumer price index. We also track the producers
price index
at this point. And both of them are rising.
Yeah.
And I guess we know why.
Yeah, we know why. But the interesting thing is that the PPI precedes the CPI in terms of its trend. You are seeing the PPI at 6% all the way from 4.4. That is huge. Why? Because of the price of diesel and the transportation cost. That is going to feed in, so you can expect that in next month you will see the CPI go above 3.8, maybe 4 or something like that. That's unprecedented in the last 4 or 5 years. So something has to be done. It's not, coincidentally, tomorrow is the day when Kevin Walsh takes over.
Yeah.
Right? So
I have to get used to not talking about Jerome Powell after this.
I know. But Jerome Powell remains on the board, mind you.
Yeah, he remains on the board.
And he has a vote.
Right.
So really, what we're going to be seeing is that Kevin Walsh takes office tomorrow. And who is Kevin Walsh? That's the first question we're going to ask. Kevin Walsh is a Stanford, Harvard-trained economist. He has his own views. He says he's not a puppet of the executive. So sweetness is in the pudding. Sweetness of the eating is in the pudding. So sweetness of the pudding is in the eating restaurant.
Right.
Now, what do we expect to happen. One, he's married to the Lauder, the heiress to the Lauder empire, the Estee Lauder, who own Origins, Avida, and all the others. So he has about approximately $100 to $200 million in private wealth, which he's going to put in a blind trust, so he's not going to be compromised. But the truth is that, based on what I see and based on what the data tells me, it will be almost impossible to bring down rates before the end of this year. If the rates don't come down soon, I think President Trump is going to be extremely worried, because we have the midterm elections coming up 6 months from now in November, and the mortgage rates, which affects every American consumer's disposable income. If they stay higher where they are, and they are now, in fact, yesterday, U.S. 10-year bonds were trading as high as 5%. So it means that your mortgage rates are up, your credit card costs are up, and the price of gasoline is up. Those are not good things when you have an election coming. So something has to happen very quickly.
Right. And thinking that, President Trump, he was on Jerome Powell's case.
Yeah.
He kept on attacking him, saying it's time to cut rates. Yeah. You're being too slow with cutting rates. Then he starts a war with Iran, which takes up energy prices. Then now he's getting his man in, Kevin Walsh, as Fed chair. But he's making his job harder. Yeah. That even if he wants him to cut rates.
The reality is that, like I say, you never know what's going to happen. Be careful what you wish for, because you may just have it. The war in Iran is not the same thing as the war in Venezuela. The Iranians are emotional, while probably the Venezuelans are rational. So we expect to see that this price of crude, based on what's happened in the Strait of Hormuz, is going to stay elevated for some time. So I don't think it will be, you were talking about 105, and I think that, generally speaking, maybe we flat out at about 90. But for us in Nigeria, $90 per barrel price of oil is infinitely, it's over 40 or 50% higher than the $60 that we're projecting earlier. So if you have $40 increase as a percentage of a $60 projection earlier on, you're doing, Nigeria theoretically should be doing very, very well. The oil windfall should begin to flow in. And remember, Nigeria announced yesterday that it has an increase in the production, including condensates, but we have to
take...
That's
1.66 million barrels per day, including condensate.
Condensate, but if you take 200,000 barrels as condensate, so we are back to a 1.4 or something. Depending on how much forward sales we made, right? That should give us a good windfall, right? A good windfall for the government. But the price of petrol, the price of diesel, price of aviation fuel is a big hit on the Nigerian consumers' pocket. So the consumers continue to cry, the government continues to smile, and then we have to align in some way. I think sooner or later, the government will have to translate part of this oil windfall, if properly managed, into a consumer palliative or some kind of support, because you can't have a tale of two cities where everything is going well.
Almost like a bifurcation at this point.
Yeah, the government is making money and the people are losing money.
Right. That's not a good sight.
No, but it will get better. There
it should balance up at some point.
There are lags between when you have policies and when you get the effect. The lags have been longer this time, but I'm sure, from what I hear and talking to people in government, there's a sense of urgency now to do something so that the guys, the people on the street, the widows and orphans don't suffer that much.
Yeah, because I was speaking to a consumer sector analyst the other day, and he said at this point, the consumer is pushed to the wall. Yeah. That's a Nigerian consumer.
Yes.
And there's no wiggle room.
It's down and out, right? So, but you have to, the fact that you're down and out doesn't mean that there's no recovery path. There's a recovery path, and that path has to be, intentional, and the government has to do something about it. It's not about sound bites and PR. It's about reality. It's about reality. And so we think that it's got the attention of everybody in government, from the president down to the finance minister, central bank, and everybody. They are aware. And believe me, I think they must be working diligently to push, to make sure that people's suffering is reduced.
Right, that'll be great to see, at this point. But Mr. Ronnie, we're going into a new week.
Yeah.
That'll be next week. What are you seeing at this point? President Trump in China, he took all the top tech CEOs, the industrialists, Boeing, they're all there, with him. What are you expecting of this trip?
Well, two things. One is he has to assure China that the U.S. is not going to increase its spending on defense for Taiwan, because China is very sensitive about that. Secondly, that there has to be trade cooperation. Don't forget, you are talking about the two largest economies in the world. Added together, you're having almost 40% of the global GDP in the hands of these countries. America has about almost 25 to 27% of GDP, global GDP. Chinese have about 17%. The Chinese are growing at about almost 5%. So the Chinese have it, very clearly. They have a clear strategy, and you can see it in technology. You can see it in Huawei. You can see it in 5G. You can see it in even the intellectual property. You can see that their currency has maintained some stability. 7, 8 years ago, it was China being blamed for COVID, right? But that's a long time ago. Now the Chinese have a clear strategy in Africa, clear strategy in Europe, and the Strait of Hormuz is where they get most of their wealth from. They're prepared for it. And so I think the Chinese are very, very, very deliberate. And so it looks like the U.S. is having to actually concede a lot to China. And
President Trump won't make it look like he's conceding.
Nobody, I think he's already, the comments he made this morning were very flattery. But the Chinese don't
have nice words to say.
Yeah, very nice words, but the Chinese don't care about that. The Chinese civilization is 3,000 years old, not more. So the term of an American president is at best 8 years, and now we have about 2 more years. So they can wait. They have the resources, they have the manpower, they have everything, and they're buying. What are they going to do? They're going to buy more Boeing parts. They're going to buy some defense equipment, and they're going to be selling some rare earth to the U.S. And you forget something. The Chinese have almost $4 trillion of reserves, external reserves, in U.S. securities. If they decide at any point in time to start selling U.S. securities, you know what's going to happen to the global market. So they know. They've come a long way, and their bargaining power is infinitely stronger today than it was maybe 5-10 years ago.
All right. I guess it'll be interesting to see how the markets react.
When we talk about commodities, I think
going into next week, we'll see how that
plays out. We should talk
about
a little bit about commodities just for a minute or two.
Right.
We've seen commodity prices begin to flatline, and then slightly higher. But of all of this, what was most interesting to us was the price of flour, which you use to make bread and so. That has come down sharply. It's about a year ago, it was about 65,000 for a bag. It's now 53,000 naira a bag. Theoretically and practically, it means that the price of a loaf of bread, which is 1,400 for the agege bread or whatever you call it, I understand it came down to 1,000. It's now at about 1,002. So why? And why is the lower flour price and not reflecting correspondingly in the price of bread? It's come down, price of bread at 1,200, 1,000 naira for a loaf is much better than 1,400. But technically speaking, it should be at about 1,900 naira.
Sub 1,000 for a loaf of bread.
But the thing is that the big elephant in the room is the price of diesel.
Right.
Because the furnaces, the bakeries, right, run on diesel. So the price of sugar is down, the price of margarine is flat, the price of baking powder is down, right? And the price of flour is down. But the cost of transporting the flour after milling to the market has increased. So people are shifting from eating bread to eating substitutes, yam and all sorts of things. So we are seeing this play out. What we should be looking out for is what's going to happen to the price of flour in the next 2 weeks, because you find that rice is now at 60,000, I think it went up. And so if the price of flour comes down, it drags down with it all other substitutes like yam, cassava, gari, and all of that. And so that could be a good sign for food inflation coming up in the next 2 or 3 weeks.
Yeah, we'll get that, very soon, and for the next, that's for this month.
Yes, but you have your MPC meeting next week, and again.
So much to look out for, and I guess as a trifecta at this point.
Yes.
All right, thank you so much, Mr. Bismarck Rouhani. Always great having this conversation with you, and definitely we'll keep tracking all these latest developments and see how it plays out into the markets.
Thank you for having me.
Thank you, sir. All right, we'll take a break now. When we come back, we'll talk about Nigeria's hospitality and tourism industry. That's in a moment. Do stay with us. Welcome back. Nigeria's hospitality, tourism, and events industry continues to evolve into a major contributor to economic activity, investment, and business networking across Africa. From conferences and exhibitions to tourism-driven commerce, the sector is increasingly becoming a key driver of jobs, enterprise growth, and international visibility for Nigeria. One brand that has consistently remained at the center of that conversation is Eko Hotels and Suites, a landmark destination that has hosted some of the continent's biggest business, entertainment, and diplomatic gatherings. Well, today we'll be discussing the upcoming Eko Hotel Summit, what the summit hopes to achieve, the conversations it wants to spark. Joining me for the conversation now, we have His Excellency Wallace W. Williams, Consul General of Antigua and Barbuda to Nigeria, a respected diplomat, Pan-African development advocate. We also have Mr. Danny Kipuroglu, the General Manager of Eko Hotels and Suites. And to join me right here in the studio, it's great to have you, sir. And first of all, I wish I wasn't wearing a suit today.
Well, it's culture.
Right.
And, if we're culture, we have to look culturally.
Exactly.
Dressed. Suits are for corporate events.
Yeah.
When we're talking culture, hospitality, tourism, we have to look the part and play the part.
Yeah, you guys look the part more than me.
Yes.
At this point, thank you so much.
Thank you.
It's great to have you both. So we have the Africa Legacy Summit scheduled for May 15th, 16th.
That's tomorrow.
Saturday, at Eko Hotels. What should participants, stakeholders, what should they look out for? I'll start with you now, Mr. Kipuroglu. What do you think?
We want to create a two-day enable environment where conversations will take place, where I would like to have heated conversations as well, deep conversations, regarding how we're going to reimagine tourism in Africa, and also what kind of legacy do we want to have for Africa tourism and hospitality. Eko Hotel is celebrating 50 years this year, so we have a legacy to protect, and we want to see how this legacy of Eko Hotel is spilling over, let me put it like that, in the African environment and in the Nigerian environment, what we want to achieve, where we want to be 50 years from now when we look at tourism and hospitality in Africa and in Nigeria.
Fantastic. I'll come to you now, Ambassador Williams, and I can't help but notice your staff.
Yes.
At this point. I'm sure there's a backstory to this.
Yes. I have 3 chieftaincy titles. We'll talk about Amomo Bowale of Imadbo and Bobadega of Imobilan, all in Ogun State, and about to receive another one from Egbaland as well.
Yeah, I was looking at the profile. It just keeps getting bigger.
Yeah.
At this point. All right, talk to me about, this summit. What are you expecting?
Right. As the keynote speaker on day 1 and day 2, we're looking at the Pan-African vision of a local brand, a Nigerian brand, an African brand, and how we can get this promoted across the continent, right, and speak to what a $1 trillion creative economy for Nigeria alone can create. So imagine replicating that among 15 nation states. Imagine Nigeria alone, 36 states, it's 36 countries. And what that can do, an ecosystem packaging, right? A nation state like Nigeria with 36 ecosystems across, and it drives the economy. It will drive the economy even more than oil, because the creative economy is worth trillions across the continent. So if we buy local and sell externally, regionally, then we sell international. Because first to begin, let's get Africa right. Let's get the infrastructure, no borders, no visas, intra-trade. Do what we call home vacations, stay vacations. So let's stay vacation in Nigeria. We have an entire 36 countries. I wouldn't even call them states because their GDPs are bigger than some states like Burundi and others, right? 36 that can be packaged. That is the job of the Ministry of Tourism and Culture. Come and partner with Echo Hotels and Suites and spearhead that drive, because you have a brand that is local and a brand that now could be replicated across the continent. Others are doing it. Rwanda is doing it. Kenya is doing it. South Africa is doing it. Tanzania is doing it. And they don't have as much as what we have here in Nigeria. But together, you know, as part of the African Renaissance, let's do the concept of Singapore, the concept of Dubai. Let's do that concept internally. Look inwardly. Stop going to these places and build what we have here. And the takeaway from this is going to be a Pan-African view. That's what I'm going to be talking about as a keynote speaker. On, you know, what can we do Pan-African-wise, utilizing Nigeria as a hub, utilizing Eco Suites as a hub, as a spearhead to drive this trillion-dollar economy, the creative economy. It must be done, and we will have to call, you know, the ministry responsible to task, and said, you know, you need to work with, in partnership with, people who are iconic. 50 years legacy is nothing to snub about. You have to embrace that, because you have something that will give you the driver that you need to move ahead. You know, so it's like a, you know, it's telling you that, look, you don't have to look far. Partner with Eco Hotels. Let's make this happen, for example.
I'd like to also get your view on, you know, we keep talking about one Africa to trade with Africa. We'd like, you know, Africans to visit more African countries, you know, for tourism and all of that. And then we're not having the risk of, you know, xenophobia and all of that. You know, for you, what do you think Africa needs to do right now to actually make themselves more comfortable with each other?
Right. Well, you know, I did a television interview, a whole hour, about 6 years ago on xenophobia. I call it Afrophobia. I don't even call it xenophobia. Africans fearing themselves. But that is a colonial mental enslavement. If you look at South Africa, what has happened? There's been a gap. They came out of apartheid, it's a quantum leap from apartheid, ill-prepared to take over the reins of power. That's a fact. That's a truth, a truism. Ill-prepared. Just a few who had the ability to corner, you know, the jobs and the high-level elite relationships, right, as part of the South Africanization. They had a black empowerment like the US rule. But not many people were educated enough, skilled enough, and had that entrepreneurial spirit. And that, for me, was the Afrophobia fear, that other Africans who are well-equipped, like Nigerians, Tanzanians, Zimbabweans, came and was making use of the opportunities. So that, for me, is part of the problem. That is number one. Number two, looking inward. The country that you are from, or rather the nation state you're from, should take care of what needs to be taken care of. We shouldn't have doctors heading out to Saudi, heading out to the United States, heading out to the UK, because they don't have the tools to make use of their talent. And people are snapping them up. A brain drain is going outside. We should now be talking about a brain gain, bringing them back. So you need to fix what is right. You need to fix your hospitals. You need to fix your schools and institutions. You need to provide Like in Trinidad, where I'm from, we have free education from primary to tertiary. And that is where we were able to develop local content. And we took part in every aspect of the value chain of oil and gas. And that's a lesson. I brought the Trinidad model on gas to Nigeria. And that is one of the reasons why we have been so very successful. GDP per individual, 25, 30,000 USD. Now, that tells you that if you have the wherewithal to immerse, right, in your population, human capital. It's human capital. They speak about the human aspect of their success. And that is key to what they are talking about, right, even at this summit. So in this summit, we are going to examine and say hard facts. We're going to criticize. We're going to tell the story like this, truth to power. We're not going to hide from saying what is required, because if we're looking at Pan-Africanism and Pan-African values, you say, and all of this happens in xenophobia, let's fix where we are first. Right. Let's make sure that everybody who has a talent can be utilized. Take advantage of the human capital. Very important. Brain gain, not brain drain. Brain gain. Fantastic. Bring them all back. All right. But make sure that they are paid well, they have the facilities, and we have it. Why do we spend money on white elephants? Are we all sportsmen? Everybody's building stadiums, and that's what you're encouraged to do. That is what I call the economic hitmen asks African countries to do. Build stadiums. You're all athletes. But not to build architecture, engineering, mining. Those are the things that need to be taught so that you can develop your own resources. Right. I talk about making sure that we have in every community a factory. And the locals patronize in that facility. Yeah, that's definitely a better mindset, you know, to have. Exactly. We talk about it. I want to just finish this point. Right. So you bring your investment, right? In Saudi, you cannot invest in Saudi unless, or UAE, unless a UAE citizen has 60% of that company, right? That is to ensure that their citizens benefit from what you're bringing. Right. We're not saying you're not going to invest and you're not going to earn. But when you invest, you transfer skills. When you invest, you teach that local community how to build the same engineering equipment that you brought. You get your percentage. And I don't want to talk about wages. I talk about salaries. I talk about shareholdings. I talk about stipend. I don't want us to be wage earners. That is nothing. You must participate in the value chain of your patrimony. Fantastic. Thank you so much for that, Ambassador. I'll come to you now, Mr. Kuperoglu. Definitely, what do you see are the key highlights, you know, standout sessions that we should look out for the event that starts tomorrow?
We have quite a few of them. We're going to look at the cultural influence in tourism and hospitality. We want to see how youth and young people can influence the growth and development of the industries. But I'm very particular about that, to be honest with you. We want to see how the young people will be participants rather than mere spectators in the industry. We want to see them disturbing and disrupting the industry, you know. And that's what we want. That's why we bring a lot of them. You know, we're going to have probably 2,000-3,000 young people, you know, that they will be not only students, but they will be young entrepreneurs, they will be young disruptors, you know, digital creators, creatives, and all these kind of things, all the kind of people, you know, so that we want them to participate in this conversation and actually link also. We're going to have also the regulators. So we're going to have sessions about how the regulating environment is important for the growth and development of the industry. And of course, it's always there, the legacy, what we want to be known as. You know, when we hand the baton to the next generation, you know, what we want to hand over, you know, and how we want this to continue and grow and develop.
Right, and we see the theme there around reimagining African hospitality and tourism. What specific challenges do you think you're going to be addressing, or you aim to address with this?
We know more or less the structural challenges that the countries and the industry faces in Africa, you know, and we want to be more practical in the way we approach these things. Issues like interconnectivity, airline connectivity between countries. I keep on telling people, open your laptop, open your desktop, open whatever you have, and look at Skyscanner, for example, and look at the number of flights that go all over Africa, and look at the number of flights that go from one European city to another. And it's crazy. You see hundreds of flights going between two European cities or two American cities, and what you see all over Africa at the same time. It cannot be like that. The barriers, the visa barriers that we discussed, the traveling barriers between African countries, it cannot be there. The Europeans are not stupid when they did the Schengen scheme, where you have 24, 25 countries that you don't need a visa to enter. Even the British that left Europe, now they want to come back again. This is the reason, traveling and connectivity between countries creates economic activity and creates wealth, creates prosperity, and that's what we need to see. So these are some of the issues also of development of human capital that the Ambassador also mentioned. You will always reach a glass ceiling if your human capital is not trained, is not developed, and it's not capable of taking the initiatives and taking the possibilities and run with them. And we keep on saying that because we see sometimes we say, okay, Nigerians don't have the initiative, they lack, they're looking to go somewhere else. That's why you have the brain drain. It's not like that. You have to have the means, you have to have the capacity, and you have to be given the opportunities for you to run with it. So these are some of the issues that we want to address. And of course, the regulatory environment, how the government is taking tourism. Are they really taking it seriously? Because if they are not taking it seriously, nothing will happen, to be honest with you.
All right, I guess we'll look forward to this event. Kicks off tomorrow, finishes after tomorrow.
Yes,
and 15th and 16th. I'll definitely want to be there.
You have to be there. You're a Williams.
Exactly. Thank you so much, Ambassador Wallace Williams, a diplomat and Pan-African development advocate, and Mr. Danny Kupuroglu is the general manager at Holdco and Suite. Thank you both for coming on the show today.
Thank you very much.
Thank you, sir.
So much.
Thank you very much.
Thank you.
Thank you.
All right. So next conversation, earning salaries, running side hustles, even taking multiple jobs, yet financial freedom still feels out of reach. Inflation is stable sometimes, but now rising at this point. So the Naira weakened so far a couple of years now, and the cost of living continues to climb. The big question is, why are so many professionals still financially vulnerable despite earning a salary? Joining us to discuss this, now we have Jumoke Olushoga, the founder, Executive Africa Financial Consultants, joining me via Zoom. Great to have you on the show. Good morning.
Good morning. Thank you very much for having me this morning.
So why do we see many professionals still struggle financially, despite some even earning humongous salary?
Mm-hmm. Okay, so the reality is that income does not equal wealth. And I think that there's a lot of misconception where people feel that, because I earn this certain amount of money, then, I'm on the path to financial freedom, I'm on the path on wealth creation. But it's not always the case. Income doesn't income wealth creation, right? So people really need to sit back and look at their net worth, not their income. And what is the net worth? The net worth is assets minus liabilities. So it's really about upping the assets and as much as possible, reducing the liabilities to increase net worth, to increase wealth, and to ultimately have that long-term financial security that everybody is working to achieve.
Is income the problem here, or is it financial discipline? Is that the bigger issue?
Financial discipline for sure is the bigger issue. And this is why I say that. If someone today is earning, say, 100,000 a month, right? And then they have a savings rate of, let's say, 50%. What happens is they're able to save 50,000 per month. And then the power of compounding interest over 10 years, over 20 years, that if they do that, every month, even on the same 100,000, over, 10 years, 20 years, it will be a humongous sum. Now, if somebody, on the other hand, is earning $1 million a month, but has say 0.5 savings rate at the end of the same period, the person is far off worse than somebody earning 100,000. So it's really not about how much you're earning, even though that can be a lever to help in wealth building, but it's not really about the income. It's more about the financial discipline. It's more about financial literacy and knowledge, and of course, the understanding of how to invest, how to manage debt, how to just basically have a long-term strategy and focus for wealth creation.
All right. Thanks so much for that. But a quick announcement for DSTV viewers now. Be joining a live coverage of a stakeholders workshop on the Nigeria education data infrastructure, where you can continue following the money on other platforms right now. Thank you so much, Mr. Lushoga. Now, so talk to me about financial habits, that separate wealth builders from salary earners. Recently, I was listening to someone talking about old money, and they said there's a way old money operates that keeps that money continuing from generation to generation. Talk to me about that.
Okay, so the first thing I would say is, first of all, even understanding where you are financially. So the habits to have, budgeting is key. So understand, where you are financially, what your expenses are over a period, if it's monthly, if it's annually, have a good understanding of that, so that, this can help to know where you need to manage better, where you need to cut costs, where you need to pay more attention to, etc. Another thing will be to have a mentality of multiple streams of income. So yes, you may have a 9 to 5, or you may be running the business, but then it's having that idea that, okay, I can do other things, even if it means passive earning, right? Passive earning meaning that you have your funds invested in the Nigerian Stock Exchange, for instance, in treasury bills, in private businesses, or just having your money work for you, so that you can be earning income outside of your 9 to 5. There's also the having the long-term perspective, because again, wealth creation and building financial security is not a short-term gain, right? And these days, I mean, social media makes it look like wealth is it just happens like that, but it's actually a long-term game, and it's based on discipline, it's based on consistency, and it's just based on having that very disciplined approach to managing your finances.
Okay.
And the last thing I'd say on the habit is just basically, as difficult as it may seem, living below your means or your earnings, because again, you have higher earnings, you feel that you can do more, you can live in a nicer house, you can drive a nicer car, you can afford more luxury holidays. But what that does is just a lifestyle inflation, where you just start, as much as you're earning, you start to spend. So you have to, a very key habit is to know that you have to manage your lifestyle in a way that you are literally living below your means, so that you can have higher savings rates, which will compound and then be creating wealth for you.
Yeah, lifestyle inflation pressure there. You want your kids to go to the best schools, you want to drive a fancy car.
Exactly.
So you want to live in a nice neighborhood at this point. But now we're seeing the Nigeria stock market, it's been on a bull run for the longest time so far. In your mind, do you think Nigerians are investing enough?
Oh, I think that we're getting better. So I was reading something the other day and saw that, retail investors on the Nigerian Stock Exchange has increased significantly. So obviously, people are becoming more aware, people are becoming more financially literate and all of that. But I think as a general population, we're still underinvested. And there are many reasons that we can think about. We can think of the economic constraints, where people, are more focused on immediate needs than long-term investing. And then there's also, of course, the discipline that we talked about, where, people just need to understand that you can't put all of your earnings or all of your income today in just meeting the needs for today, and just trying to run this rat race. And there has to be that disciplined approach to putting funds aside. A lot of professionals will say at least 20%, and then using this to invest in the future. But again, I think that there's a gap when it comes to financial literacy. People need to understand, because again, knowledge is very key when it comes to financial investing and just building wealth. It's very important to understand, to know, and not to just speculate and take undue risks and expose yourself. So there has to be a lot of learning, getting professionals to help and assist and educate and just basically close the gap of financial literacy. I think that once that happens, then we'll see a lot more people investing. But I think, to be honest, there's been growth in the level of retail investors in the country.
Yeah, it's quite interesting. People that never used to invest talking to me about investing now. So I guess there's been an improvement at this point. All right, thank you so much, Jumoke Olusoga, as a founder, Executive Africa Financial Consultant. Definitely a conversation we'll keep having at this point. Thank you so much.
Thank you so much for having me.
All right, let's go global. Let's see what's happening there.
Happening in the global space, especially the meeting with between U.S. President Donald Trump and Chinese counterpart Xi Jinping. I'm just going to quickly just talk to Ladi now before I get into the story. Ladi, what is your take there? Because we see China rolled out the red carpet, the pomp and the parade, just to welcome President Donald Trump and the delegates that were the tech CEOs that were there with him. And we saw the handshakes between the president and those tech CEOs. It's more like, what's happening now? What are we going to do? But after the meeting, surprisingly, there was no agreement reached yet. But we did see President Xi Jinping warning President Trump not to allow the Thucydides trap to,
What a tough word.
Yes. And for people who don't, it's kind of like a tongue twister there.
Yeah.
And for people who don't know what that is, it's more like that theory that, is about how wars can happen when rising powers challenge an existing powerful country. And in this case, it's the U.S. versus China.
We've seen it, happen, in the past, a really powerful country, somehow, falls off that seat, then another one comes up and takes over, the run. But definitely a lot of expectations, from these meetings. Every CEO, top CEO with President
Trump,
they're expecting something. If it's Boeing, if it's Tesla, they all want something.
AI,
from
semiconductor
China at this
chips,
point.
everybody's talking about.
Exactly, but it'll be a waste if nothing is agreed before they come back.
And Xi also warning about U.S. interference in Taiwan. That is also a very serious matter that they're not taking lying down. They just want the U.S. to interfere in that.
The negotiations I'm seeing so far, geopolitics is like ping pong. They keep hitting it back and forth.
Back and forth.
Hopefully.
Definitely, we hope
somewhere.
that we get somewhere from this meeting. And definitely, we did see, as you mentioned earlier, President Donald Trump and Xi Jinping, they've concluded a high-stakes summit in Beijing with trade tensions and Taiwan emerging as key issues during the talks. And the meeting lasted about 2 hours and comes amid efforts by both countries to stabilize economic relations and ease geopolitical tensions. Chinese state media says Xi warned that mishandling the Taiwan issue could lead to confrontation between both powers, while trade restrictions and technology controls were also discussed. Now, the summit also touched on tariffs, artificial intelligence, semiconductor exports, and the ongoing Iran conflict, definitely. Now, no major agreements were announced immediately after the meeting, though both sides signaled interest in maintaining dialogue. And Japan is stepping up efforts to expand its defense exports following a major policy shift that now allows the sale of lethal weapons overseas for the first time in decades. And the move is expected to increase competition with South Korea in key Asian defense markets, including the Philippines and Indonesia. Turkey recently eased long-standing export restrictions that it seeks to strengthen its defense industry and deepen security ties with regional partners amid rising geopolitical tensions. Up next, Israeli Prime Minister Benjamin Netanyahu is reported to have made a secret visit to United Arab Emirates during the height of the war with Iran, where he held talks with UAE President Sheikh Mohammed bin Zayed Al Nahyan. The meeting is said to have taken place on March 26 in Al Elain and lasted several hours, focusing on security coordination and regional developments during the conflict. The Israeli government described the visit as a significant breakthrough in relations between both countries, including discussions on intelligence sharing and military cooperation. However, the UAE has rejected the claim, insisting that all diplomatic engagement with Israel is conducted openly and officially under established channels. The development comes amid heightened tensions in the Middle East, with Iran reacting strongly to reports of closer cooperation between its regional rivals. Next, we see the U.S. Senate has confirmed Kevin Walsh as the next chair of the Federal Reserve, replacing Jerome Powell at a time of rising inflation and heightened political pressure on the central bank. Walsh, a former Federal Reserve governor and Wall Street banker, was approved in a closely watched vote largely along party lines. He takes over as President Donald Trump continues to push for lower interest rates despite persistent inflation concerns and volatility in global markets. Walsh's first policy meeting as Fed chair is expected in June, with investors closely watching the direction of U.S. monetary policy.
All right, thank you so much, Will. We'll definitely keep tracking what's playing out in those countries and see how it impacts the markets at 1:30 on Business Incorporated. But for now, NGX near flat, but stocks like Axis, First Holdco getting attention. Gold is flat, silver big drop, oil is still up. We'll bring you up more updates 1:30. I'm Ladi Williams. Bye for now.